Alrighty, good morning everybody. It's Thursday, June 30th, 2022, finishing out the month of June here. Gonna jump up and look at what happened yesterday, but it's gonna be a really quick review because yesterday was just total sideways, super balanced type of market. So just want to show you um, the only trade call that we made was when price started pushing and pulling back into the VWAP, the 200 moving average, and the holy orange power level. In fact, here's another morning where the market pulls back and bounces to the tick. If I could zoom in here, to the tick right off the holy orange power level, and gives us a 17-point bounce right up to the high the day before. So, or actually I take that back, right to the high of the overnight session. So we came up, it broke the high of the overnight session by one tick, if I recall correctly here, or maybe just came right to it, and then that was it. So a nice 17-point bounce out of there for a trade, the only trade that we called. And then the rest of the day, you can see just back and forth sideways, just not the type of market that you should be trading in unless you're a short time frame scalper. And so you can see that really no strong respect of any of the levels. Just kind of messy. Couldn't really get through this zone from 31 to 34 and tried to get through multiple times here at the end of the day and then fell back down right into the middle of the balance area. And then from there, coming into this morning, you can see that the bears have come back in control and broken us out from that previous chop box. So that's where we find ourselves this morning. Going to jump up, and I want to point out as well that remember that box that I mentioned yesterday here. If you look back to that right there, and then how it extended out to our overnight session yesterday, well, for the rest of the day, we basically chopped back and forth within that box until, like I said, the overnight session here, we finally come down to duck down and get out of that area. So just want to mention that. And now we can take a look at our daily and start dialing down from there. I'm going to bring up the daily chart here. And again, I'm not a huge fan of this potential bearish signal we talked about a day or two ago off the highs. But it, for whatever it's worth, I do have it marked there just as a visual aid to remind us that we did talk about it. And again, I really, even though we are getting a strong pullback and we have the weekly and we have the 4-hour and we have the hourly, this is one of those situations, if you're familiar with my trading style, where pretty much every time frame except for one in between doesn't necessarily line up with a perfect setup. But every other time frame surrounding the daily definitely has it. And like I said, there is that sort of an argument there if you look at those previous highs. So for whatever it's worth, there it is. And now we've pulled back. We've got a pullback from 39.50 all the way down to about 37.50 now. So nice 200-point correction so far. And we're now pulling back right into the 61.8 retracement. Now, when we look back, if we get down to the shorter time frames, I do want to point out the 38 retracement and the 50% retracement of this leg up from the lows back at 36.39 from 2 weeks ago. They haven't really been used. The 38 was not used in any nice, clean way. The 50 was not used cleanly yesterday. And now as we come down into the 61.8, we're bouncing a few points in front of it. I believe maybe 4 or 5 points in front of it. And, because the first two levels have had no respect, I don't know what's going to happen here off that 61.8, but it is there. We have to be aware of it. Just because this leg right here hasn't been respecting a lot of the levels doesn't mean it's not going to respect the final 61.8. So we've got that on there. And then everything else is basically the same as far as levels go. So let's go into, I will mention here on the 4-hour that we had the double top. We had bearish divergences on both sides. And that's why we were talking about and emphasizing all the multiple time frame bearish signals. And we had to see going into yesterday. Were the bulls going to hold that 4-hour bullish signal and come back up, or were the bears going to stay in stay in power and continue to swat it down? And yesterday was just a battle up and down. Finally, we're getting that swat back lower here in the overnight, like I've said a few times now. On the pullback, just like we had a little bullish divergence on the 4-hour here from our overnight lows yesterday, our overnight lows from today also have an argument for a bullish divergence as well. So remember, when you're in a trend, when you're in a downtrend and you get counter signal bullish signals off lows, the question becomes, is that going to now be the major reversal section or zone, or is that going to be an area where there could be a potential bounce? And that bounce, like I said, in a strong trend might only be very shallow. It might only be 5 points. It might only be 10, 20, or 30 points. And then the next thing you know, the whole thing topples back over. So just be aware there is that bullish divergence from the overnight low on the 4-hour. And then over to the 60-minute, we also have it as well. So remember, 4-hour and 60-minute confluence can end up leading to huge moves, just like we got off of the highs back off 39.48 and 39.50. And so just like the scenario from yesterday, we have the same scenario here, a 60-minute and a 4-hour bullish divergence from the overnight low. And so far, that's led to this bounce from about 37.60 to 37.82, 83, 84 here for just over a 20-point bounce right now. And that might be it. Look at this 60-minute candle here. Huge flush up to 37.84, and then end up getting a huge pullback and closing down basically at the lows. So if we can't get through the high here, and we definitely can't get through this high that we made around 2 a.m. Pacific here at 37.8675, we'll have a bearish divergence on the 60-minute, and we won't be able to breach those two levels. So that might be a clue for a pull. That might be a clue that this bounce from the overnight low is done with, and we're going to roll over again. So be aware of that. And with all of that being said, let's just look at the levels what we have to deal with here coming into the open. So if the bulls end up bouncing out of this level here, again, like I said, it was a few points in front of that 61.8 retrace here. If we go back, in fact, I want to mention it right now. Here's the 50% retrace. You can see we bounced too far away for it to be a nice clean bounce. So 5 points from it, and then we just kind of broke through it. And then the 38, if I could find that in this whole mess here, the 38 was right here. And as you can see, it just kind of came down, and then it was just super messy around it, and then broke lower. So these retracements on this specific pullback haven't been working very well, but we do have that 61.8 there. So anyway, let's look at the levels that we're going to deal with to the upside here this morning. We do have the retracement back up. So assuming that we don't make lower lows here for the day, we have a fib retracement scheme back up. And it just so happens that the 38.50 and 61 of this leg down happen to line up almost exactly with some of the other key levels that we want to be aware of. So we do have the 38 lining up essentially with all of the highs, all of the trouble we got in our overnight session from yesterday going into yesterday morning. Huge resistance here from this. You can see this dotted line here that comes across. I'm going to keep that on there for today, not only because it was major resistance yesterday and back on June 24th, but it's also now the 38 retracement, give or take like 1 point. So we've got that on there. A little bit further up from there, again, if we can get through this swing here at 38.01 quarter, we can get back up through the chop block between basically 3800, 3807, 3812, 3822, and then the 38 retracement here at 3833. Then we're looking at a push right back up into the 50% retracement of the sell-off, which would bring us to this swing low here at about 38.51. And then we have the iLevel at 38.53. and then the 50% retracement again of this whole pullback here would be 38.55.50. So we've got a little pocket from about, let's call it 51 to 55 here. That would make sense to be trouble on the way back up. So we've got that there. And then the 61.8 of the whole sell-off here would bring us right up into, we've got the major level or the minor level at 38.75. We still have that relevant gap level there around 38.78. And then the 61.8 itself is kind of sandwiched in there right around 77 3/4. So you've got that. And then this pretty prominent swing low, if they break through the 61.8, that prominent swing low would be here, the exact number being 38.85 3/4 there. So we've got that. Then we've got the top end of that gap. That was a relevant support level for quite a while for the last few days. So we want to be aware of that. It's the same level, 38.96.50, I believe. And then we're back to the major level at 16.50, and then the three minor levels up here where we had trouble a few days ago. So that's what we're dealing with up above this morning. Because we do have the 4-hour and the hourly bullish divergence, there is a case that there's a case for a bullish breakout, but we're in the context of a very heavy market. So the question is going to be how far that can go. If it does end up getting swatted down and we come down and break through the overnight low, we do have, again, the 61.8 sitting there just a few points below that. And then we're down into the other minor levels and major levels below us here. So I'm not going to sit here and list those out. You guys should have them on your chart. But I do want to mention two other levels that I've added here. So we've got a little pocket right here, about 37.47 to 49. Again, it might be a few ticks below, a few ticks above it as well. But that little pocket right there, given some previous reactions we were getting right around that area, tells me that there could be some type of reaction from there. And it might be from the top end. It might be from the bottom end if we break through that and come back up and test into that area. So just be aware of it. I'm not saying it's like going to work, but it's a level that would make sense if we came down. Look at how open it is here. We've got 37.35. We do have the retrace level and then 37.74. And then that's it. There's nothing else within here. So I figured I would give you the one level that did stick out to me that we don't actually have on here as an official eye level. So be aware of that. And then down a little bit further, we do have this swing that we haven't come to test yet at 37. Let me get the actual number. 37.13 half down into the eye level at 37.09. It also just happens to be the 27 extension there at 37.09. That is probably, I like the fact that it's lining up, but remember, once the low breaks of the overnight session here and we go lower, this leg is then going to have to be extended out. So this extension will then, or projection, depending on what terminology you want to use, is going to change. So I'm not necessarily hanging my hat on that, but 37.09 to 37.13. And then if they break through there, it's again just one by one. We've got all the major and minor eye levels down here as targets to the downside. That's about it for the open here. Don't really have much else to add. Just see if there's anything else I'm forgetting here. I think that's it. I would say that this double top that we made just a day or two ago is a very clear bearish pattern that we would expect to lead to pretty major fall back down. But the market, everybody has been talking about it. The fact that the market, even though we do expect it to continue to sell off and maybe even come down, and I've been saying I would expect the market to go back and retest the lows of the COVID correction, which would bring us back down to about 2100 on the S&P. Even though those are our expectations for lower, a lot of people are talking about some type of rip your face off rally back up. Just maybe let's go all the way back to the all-time highs all the way up at 4,800. Maybe we get some attempt here and the bulls just rip this thing all the way back to, maybe 50% of the move down, or maybe 61.8, or maybe get all the way back up to the 45, 4600s. But then the expectation is for the whole thing to just drop out really violently and bring this market lower. Again, who cares about what could happen in the future? We're just going to be trading what the market's doing on the intraday time frame. But that's something we cannot ignore, is that at some point there could be some type of major rally back up. So for now, still skeptical of it, but the possibility is always there. With that being said, I think we're all set for the open here. Be aware that we do have coming up at 15 minutes after the open the Chicago PMI, and you never know with major news coming out. You never know if there's going to be a huge jump in the dome and some pretty volatile action at that point. So be aware of that about 15 minutes into the open. All right, guys, we will see you tomorrow.